Many, investing in bonds was usually a safe way to save money for retirement, but with only modest returns. Over the long term, stocks are proven to get higher returns, but when are bonds the right choice? Marshall Clay with the Wells Group joins us now to talk about bonds. Good morning to you, Marshall.
Hey, Mike, how are you?
Good to see you. Well, let's talk about that. I know a lot of folks did invest in bonds, and they had their pros and cons. What about bonds?
Yeah, so I mean, for the last 40 years, bonds have really been an amazing investment. I mean, we've seen bond yields go from really high levels down to the really low levels that we see today. And I think if you're a borrower in this environment, I mean, it's a great time. You just look around, look at mortgage rates. They're close to all-time lows. I mean, that's great for the consumer. But if you're a lender, if you're someone who's looking for some type of income or some type of return on your investment in bonds, it's a pretty tough environment, but there's still a place in everyone's portfolio if you're a disciplined investor for bonds, and that's what we're going to talk about today.
And when you talk about diversification, I mean, right now, some folks who have 401ks, maybe they're a little bit younger, they may be thinking, hey, I need to put my stuff in bonds right now. It just seems a little risky right now. What do you say?
Yeah, I'd say, look, I mean, I think you definitely have to have a diversified portfolio, a good mix of both stocks and bonds. Most people do for the long term. But if you're looking for preservation of capital and some additional income, bonds are a great place to look. And I would remind your viewers back in the depths of the coronavirus back in late March. Everybody's been looking at the stock market and how great it's done over the last several months. But during that environment, the stock market was down almost 35%, whereas the broader bond market was only down maybe 1.5%. So bonds provide a lot of stability in your portfolio, particularly when times are at their worst.
Now, a lot of people are going to want to have access to that money, especially during this pandemic, because emergencies may arise. What about bonds when you're talking about liquidity?
That's a very important point. So, one of the big considerations that all investors need to take to heart is their ability to liquidate any potential investment and get cash, right? We all have these events in our life that pop up, some foreseen, but a lot of times unforeseen, and we need to have access to that cash. If you're looking at the most liquid markets in the world, I mean, the U.S. Treasury market is the most highly liquid market in the world. It's very easy to get out of those investments and get your money. So that's definitely a big consideration, particularly in this environment.
All right, Marshall, quickly as we wrap up here, what about if I'm saying, hey, I might want to use bond investments as a source of income later in retirement, possibly? Good idea, bad idea? What should we consider?
Yeah, so obviously not as good as it was 10 or 15 years ago, but if your viewers look at how much they're getting paid in checking accounts and savings accounts and money markets right now, it's essentially zero. So if you're looking for preservation of capital and some additional income, bonds are a great place to look. I mean, if you're looking for more preservation of capital, look for very high quality type bonds, shorter duration. If you're looking for a little bit more income, or you're a little bit more income oriented, look for longer duration bonds and maybe some with a little bit less credit quality.
Marshall Clay with the Wells Group, appreciate the information.